Hello guys, so today being the 1st of January 2026, I'm just going to be analyzing the chart every day. Coming to the chart, analyze whether we have a setup for that day or not. I'm just going to be analyzing the chart. So basically I'm just going to be using what I call range liquidity market structure. Understanding your directional bias, your trading range, your market structure, liquidity, and others. So I usually start my analysis on the 4 hours time frame, and the 4 hours time frame this you can see this low being broken here. Excuse me, one sec. Yes, you can see this low already being broken. So once the low was broken, this was the one that was printed. When the low was broken, obviously this is the major high. Low was broken, and then we have lower low here, and then we have lower high here, and then we have lower low here. So if you ask, why did I call this spot a lower high when some people would have expected market to come into a very big zone here and give a lower high? Fine, market might come in there, but it might take a lot of while. That's why you need to understand market essence. So if you look at from here, you would notice that market from here to here, you will notice that market already came into premium price. So I did my the pink is a premium price, while the light blue is the discount price. So remember, we want to be selling from the premium price and buying from the discount price. So we can see market already came into you can see market already came into the place into so we have from here down like this. Do just put it like this, and then market broke it, and then we started buying up. And when we came into the premium zone, what did we do? We did what? BS, and started buying down again, and then broke this low, and then so the same repeated pattern that was supposed to happen. So market is what supposed to come into what? A premium, and then what? Give us some form of what? Structure to the downside, what? And give us under low, print under lower low. Market supposed to print under lower low, exactly like this. So in this case now, if you can see, if we draw in this case now, if you draw our price, because this is now your new swing high. So if you draw the price from here down to your swing low, you will see that market has not come into what? Into premium. This is what I call trading range. We want to buy from premium, and we want to be selling from premium and buying from demand. So we can see that market did not come into what? Into the premium zone. Sorry, we can all see that market what? We are still trading in the discount zone. So market's down here. Let me just give a series of this. Let me just analyze this way, so you can see. And then before you know, market what did what? Broke structure to the upside. So that's giving us, and remember, we want to be buying in discount because this is the premium. Sometimes waiting for market to get here might take, this is on, especially on the 4 hours, it might take weeks, even months. So we won't also follow the trend. We are buying in discount and selling in premium, but we have to consider the trend. The only time I would love to consider the trend in all this is to know when I'm going to hold the trade for a longer time than usual, because of the internal range liquidity and external range liquidity, which one is supposed to be targeted. So we can see when market broke structure here, market what the market do? Market retested what? Bought up, but market never came into the 50% zone. So we cannot start selling right away. Market came into the 50% zone. So even if, just so you know, because of this downtrend, right, we can only expect market to break this low when market what has come into premium. Even if it just came into here, that's when we expect external range liquidity to be taken out. But if market has not come into here, it's just going to be taking internal range liquidity, which market used this particular place as an inducement. And what the market do again? Market what broke structure what to the upside, and the market did the retest. So with this idea now, we've already understood that we are buying. Yes, the long term is sell, but the short term what is what buying. We are buying because of what we figured out our range. We are buying. So now go down to the 1 hour to now see that market has been what same thing. So on the 1 hour now, because on the 4 hours we already figured out that we are in a discount zone. So on the 1 hour now, we can see that what market what broke structure to the upside, came back, collected what liquidity, internal range liquidity, right? And what the market do? Market shifted structure to the upside again. So as you can see, I was waiting for the buy to happen here, but an internal range liquidity was taken out here again. So we have 3 type of ranges. We have, although I'm not teaching, this is just an analysis, so I'm not supposed to, but we have 3. We have structural analysis, we have your new range, we have your internal range, your structural range, and then we have your new range. So basically this whole so basically this whole setup on the 4 hours, this whole place, this whole move on the 4 hours now is your structural range, because we figured that we're in a discount, not in premium to sell. This is a structural range. Then your internal range now is now going to be from your internal range is just going to be, okay, we understood that market what came here, did this, came here, did this again, then broke structure to the upside. So obviously we're expecting market to what, if market broke to the upside and we're expecting market to come down, if we draw our range from here to here, excuse me, draw a range, let's just draw a range from here to somewhere around here. Let me just from here to somewhere around here. We can see that what market even came into, excuse me, so let me remove the structure now. So we can see from here that market came into what, market came into the discount before what, buying up. So this on its own now, from here to here, is a structural range. So that is what your internal range, where we are looking at from the high to this low. Then from the high to this low, how do I know that this was a high? Because what market took out, how do I know that this was a high? Because market came to take out this low here, which is what, an internal range liquidity. Center. An internal range liquidity was taken out by this candle. And if you notice, look at the way market dropped. First bearish candle, second bearish candle, third bearish candle. So this is giving you that, okay, this is a very good high that is here. So immediately market came back, market took what, internal range liquidity. Immediately market took our internal range liquidity, then you understand that what are we looking at now? We are now looking at your new range. Your new range after market from internal range liquidity. So after market from internal range liquidity, we are now looking at what, your new range. So basically your internal range from here to here is only going to be so when market does something like this. When market comes like this, market break structure, then give one low, and then did like this, and then market what, internal range liquidity. That's why some people look at it as a break of structure to the downside, but it's internal range liquidity. Then you will now notice, if market does something like this, rather than keep breaking structure to the upside, and the market now comes to a supply zone, because remember I told you they always sell at premium, buy at discount, and does something like this, market came into your premium and started giving you signs of what, collected liquidity, now start giving you signs of what, downtrend. What are you supposed to do? You are supposed to now, so then you now understand that, okay, market, this internal range liquidity is not enough. That is when we will now be using what, the whole this whole point here, That's when we'll be using this high and this low, which is what the internal range liquidity. But if market should only come and take out internal range, then but if market should only come and take out what and take out internal range liquidity, which is around this point. If market should come and take out internal range liquidity, then and now buys up and breaks structure to the upside, then we now have our new range. So if this was the low that broke this high, if this was the low now that broke this was the low that broke this particular high over here, that means this place, your range now is no longer going to be from here. Your range is not going to be from here anymore, from this low. It's going to be from this new low market formed when taking internal range low, and then this is your new high. So now same thing, we draw our range. So drawing our range now, so you can see that I have gone from the 4 hours down to the 30 minutes with range and market structure and liquidity. Now we are on our range now, and then same thing that happened here. Market sometimes might not come into the low. You can see market already came into what? Remember, this is premium and what? This is what? Discount. Market already came into the discount, and you can see market already came to the discount. Let me go to the 5 minutes to show you exactly what I'm talking about. Market already came to the discount. You can see, remember, this is a supply zone, and for buyers to take control, it means the supply zone filled, right? And look at this low that was printed here, a small low that was printed here. So this is what internal range liquidity collected. Market has collected what? Internal range liquidity. Market has collected internal range liquidity around there. So what I expect market to do is, market, this is a high, this is the last high that was created, and this is the last low that was created. And then we now understand what? We understand the laws of trend. The law of trend says that when market is going up, uptrend is not supposed to be what? Uptrend is not supposed to be breaking highs. It's not supposed to be breaking low. It's supposed to be respecting the what? It's not supposed to be breaking low. Then downtrend is what? It's not supposed to be breaking what? Highs. Downtrend is not supposed to be breaking highs. So now that we've gotten our new, so after market, so basically what you should be looking at sometimes is after, what you should be looking at is sometimes after market has broken, what you should notice that in scenarios like this, when market already takes out internal range liquidity, you just have to wait for what? A break of structure to the upside, which I would have gotten around there. Because remember, market took out liquidity, market broke structure, use a breakout block to continue the push to the upside, and then you can see this whole area here. You can see this whole area, fair value gap. You can see this whole area of fair value gap, and you can see that what? When market took out internal range liquidity, it took out liquidity, and what is it using to bounce up? Is using what? A fair value gap to bounce up. So what will now give me extra confidence is to now take this trade is what? When I see this high taken out. Remember, in a downtrend, highs are not supposed to be taken out. So once this place now is taken out, once here is taken out, what do? Once here is taken out, then this range now no longer becomes my range. This is now my new range from the high to what? To this low. From the high to this low will be my new range. Why? Because this low has broken structure to the upside. So this is now what? A very good major low. The market is not supposed to be breaking on a high trend. So I will just expect market to break structure to the upside, breaking this high, and then give us a retest, because we are not supposed to be buying at premium. We are supposed to be what? Buying at discount. So give us a retest, and then TP1 most especially be from here. But because we're coming from the 4 hours, so we already understood what this whole area is. We are going to be buying to this whole area, all these